Hey, what's up, traders? So we're running a contest every single month. We pick one winner who comments, likes, and to subscribe to my channel and comments on every video this month. We randomly pick a drawing, and hopefully it's you. Just be sure you like, comment, and are subscribed to this channel, and you'll get free access to our full training academy and everything it is have to offer. Good luck, peace, and enjoy the next video.
Hey, what's up, traders? It is June 3rd. I thought I said April. It's June 3rd, 2020. I can't believe it's June already. And this is our weekly or daily update. You know, it's been a crazy start of the week. The market's all over the place. Man, you know, like riots, protests, looting. I think when people start looting, it's not really a protest anymore. It's just, you know, things have taken a turn for the worse. So, you know, who knows what's going on, but like the markets, I thought we're going to go one way because that I thought we were going to get a bunch of risk off. I thought, you know, we'd see some super strong yen and safe haven assets, which I talked about in our weekly outlook video on Sunday. And nope, it was the opposite of that. The past 2 days, the markets have just rallied and rallied. And crazy Aussie strength, Australian dollar, New Zealand dollar, CAD, and you know, yen, US dollar, dead as a doornail, right? So who would have thought that, you know? But so I want to talk about that in this video of like how we switched it up, how we started to approach the markets differently. And I think I mentioned this in our VIP group in like a message. I think the chances now that all the positions have been shaken out that were like, you know, heavy on the yen side, heavy on US dollar, and, you know, starting and like, you know, anticipating the market dropping because of riots and, you know, nobody's even talking about coronavirus anymore. But coronavirus and then the looting and everything else. Now those positions, people like me that were long yen, like, you know, or in other words, thinking US dollar yen was going to tank, and as well as like other yen pairs and the dollar strengthening big time, like, you know, Aussie US dollar, NZD USD, and that didn't happen. But I think that is going to happen now that all these other positions are out of the ballpark. Then comes the real move. So we have that to look forward to. You know, it just took some tweaking and adjusting. And man, you got as a trader, you have to be able to adjust. It's so important. This is unsweet iced tea and lemonade on little Arnold Palmer. So if anybody thinks I'm just out here on the back porch getting trashed doing these Forex update videos, it's just sweet tea, so unsweet tea. So it's delicious too. So yeah, let's get into it. Let's share the charts. Thanks for your support. We have the best group out there. I'm not just saying that. You know, the vibe in our group is amazing. It's supportive. And look, we all just want to win. You know, nobody's talking about this in the media. Nobody's talking that, hey, you know what people really want? They want to be able to provide for their families. They want to be able to make a living for themselves. They want to be able to have some self-respect and, you know, actually have some freedom. And that's what trading provides. And that's what I am really, what, you know, you're allowed to do in my group is to better yourself. It's not about this group's right or this group's wrong or any of that stuff, you know. And that's one of the great things about trading is that the market doesn't care. If you can learn how to beat the market, it doesn't matter what, you know, it's an equal opportunity employer, but man, it's a tough employer, that's for sure. So so having a group like ours makes it much I'm not gonna say easier, but makes it better, makes it easier to beat the markets when we're all in it together and approaching it together. So yeah, so if that interests you, click the links below to get started, and you won't be disappointed in our group. I can assure you that. So right now we're looking at NZD USD, but what I want to get into and talk about more than anything is I think well, first of all, we'll just have a quick peek at the stock market, at the S&P 500, and just so we can see just this sheer wall of upward momentum. And man, but look where we're approaching this. I've had this box for about 2 weeks now, and so this is pretty interesting. So I actually am trading on 2 different iPads. Like if you notice, the setup was, I tried to switch it up like a month ago, and this is actually the old setup. So I do all my other charting in this iPad, but then go back here. And so sometimes I have to redo these charts specifically to do them all over again for these videos, which is actually a good thing because it makes me take a look at the market in a different way. And I am super glad I'm having this look right now because this potentially could be setting up here as a massive throw over line. So you can see this confluence that we've got going right now, and of course we've broken above the support there. And if we hit the 78.6% retracement, which is we're at right now, I think I need to adjust this just a tad, but here we are. We adjust that, we hit the 78.6 retracement, and if we pull back, I can just, maybe we go something like this. If I pull back here, and the point is, if we get back under this throw over line, this is going to be a big deal. This is going to be very, very bearish, and I think that's where we're going. Like before we continue pressing higher, I think we're going to have a pullback to the downside. Like if we go to the daily chart here, we're just now getting, man, I mean, this recovery is unreal. It really is. Like if you just think of this logically, the fact that this just keeps pushing higher and higher and higher, and the reason behind it is the fact that the Fed's just printing money and bailing out the people at the top. It's a small business loan, but most small business owners that I know, including myself, didn't get a loan. And I have employees and stuff, but a lot of these businesses at the top, they did get these loans and these bailout money, these bailout dollars. And what are they doing? Instead of trickling it down or in hiring more employees, most businesses are cutting their employees, cutting their staffers, and then taking their money and buying their stock back. And so what we've got now is this incredible stock market pump. Damn, this wasn't even going to be the concept for this video. But what we have is this incredible stock market pump here that is just all built on the magic money the Fed is just printing out of thin air and pumping these numbers up and just making the nucleus of the rich and the rich at the center in a big way get more rich. And you know what? I think that's why there's so much frustration, obviously, with people that are rioting and protesting and stuff. But of course, looting and stuff isn't the way to go about it. And a lot of that has been instigated by outside forces that are meant to just create chaos and stuff. But, all that aside, I think a big takeaway of this is how important it is to be looking at gold and silver. And I think cryptocurrencies are going to take off soon, like Bitcoin. And another reason why I think that is that the chip reader, I guess you'd call it, that Microsoft, the RFID implant chip that Microsoft has a patent for. And I'm going to pause this. I'm going to look it up just so I don't get any information incorrect. All right. Okay. So anyways, without getting off on too much of a tangent, it's not necessarily Bitcoin, but Microsoft is. It's a tracking chip. It's a tracking chip, and you can't make this up. And the patent number for it is 060606. In other words, 666. So that's your daily dose of conspiracy for the day. But because of that, I think cryptocurrencies are going to become way more in the forefront, especially as the value of the dollar, since it's being obliterated right now by all this money printing by the Fed. We're going to see cryptos take a big step into the spotlight. So that's the rally on the S&P 500 and what's going on despite all the riots and all that. So now let's take a look at Aussie US dollar, AUDUSD. So this is where we start to see the just like huge risk on activity, and this is what really threw me for a loop at the start of the week, is just this massive these massive risk on moves, right? So and wow, like this has made a huge, just where Aussie was, man, just like a month ago, just getting crushed everywhere you look. And it's like, okay, nope, I'm back in the game. But man, this is looking like a good setup here on AUDUSD, right? What do you guys think? So I think it's very good. I'm actually going to go ahead and pause and send this out to my VIP group, because like I said, I think now we're getting to here comes the catch-up time. Everybody got thrown out of the market, and that's what the market does. It doesn't play nice. Like what I said earlier, is it's an equal opportunity employer if you could stick around long enough. So you know, that's why it's so important to some days you just got to stay in the game. So I'm going to pause this and let's take a look at, but these numbers, 69.20, and this is a big psychological level, 69. So you know, obviously we'll have some resistance here, and hey man, you know, these bankers and stuff, they're sick, I'm telling you. So I'm joking, but it's not really a joke too. You know, there's people behind everything that's going on here, and it's all tied together. And what people don't realize, and why it's so important to be informed, you don't have to be just like trader extraordinaire, but you know, to be informed about what's happening, everything I just talked about with the money printing and how that affected the S&P 500 and the value of the dollar. It's so important, because then once you see the big picture, it's not that shocking to be like, oh yeah, of course they would, you know, instigate riots to be able to push their agenda and stuff, like, because at the end of the day, whoever's controlling the money system is really controlling what's going on. So I'm going to pause this, get this signal out here, but this and look, I'm not trying to I'm just saying what's out there in the open too, and it's just all my opinion. You are obviously, you know, do your own research for yourself, and that's all I encourage anybody to do. If you do that, then I think you will be pretty shocked about what's going on, because you know, they've exposed themselves, and this is like, it's all out there in the open. So but what we're going to do, and what we are doing, is doing our best to navigate it. If we can get the know-how of how to navigate these markets now, you know, you can have an avenue for income no matter what happens. So I'm going to pause this. All right, so we got you can see perfect setup here. I just love it when it works out. Like, I would honestly like the stop loss to be above, a little bit higher above this kind of level of resistance here. But this also could be you could look at this as a potential false breakout, or at least that was. But you know, now that I adjust it, maybe not so much, but this is a high level of resistance, and the risk reward is very, very good here. So, but hey, man, that's what I thought the whole first couple days of the week. So I'm not going to get too far ahead of myself there. And let's see. But looking at these pairs, okay, looking at these Aussie pairs, you can see how they've just been stretched so thin. So GBPAUD is, man, this is the trade I'm going to be looking at for the next month, it seems like. If I can find it here, and man, it just would not stop falling like a waterfall status. But here we are. We've already caught 100 pips in this trade, and you wouldn't even know it by looking at on the daily chart because there was barely even a blip. But you can see this big wick right here, which is it's actually a spinning top. We caught both sides of that, which turned out to be a really good trade, and now we're back in it. But with a trade with like this kind of movement, we can actually go to the here's the daily chart. You can take this setup though all the way out to the weekly. So we're at a huge, make or break point. Like if we look at it from this daily chart, it would look like we're already underneath this trend line. Now, I don't think we've completely fallen down from it, and I think we would need some more downside. But if that does happen, and we can look at it on a weekly and get a much better view. If that does happen, then oh man, this is going to be a massive breakdown. But to be honest, I don't think Aussie has it in it. But if the S&P 500 just busts past that 78.6% retracement and just moves even higher without any type of dip or pullback, then that will definitely give Aussie the rocket fuel it would need to, and that 69 level on oh man, my battery's dying, on the Australian dollar, US dollar won't even matter. We'll be back at 0.72. So I'm gonna pause this, let my computer charge for a little bit, and then wrap this video up. Alrighty, okay, so this is GBPAUD. So like I said, the potential for the upside in this move is monstrous. And so this is, what I was aiming for when we hit our stop losses earlier in the week, or, on Sunday. And here we are on Wednesday, and we've dropped another 300 pips or so. And that would be our upside target, and then even higher, because check it out. This is why it's so important to be able to get a grip and grasp on a larger time frame. This looks like a channel, and here we are, higher high, higher high, high, higher high, right? So would we keep on making that? It looks like, potentially we would, or at the very least, fill out this pattern, whether that or not that's going to be a channel here, which definitely looks pretty doable. And like if we fit it along right there, is a perfect fit, which that alone would be like 2,000 pips. So like the potential for GBPAUD here, what I'm saying is absolutely monstrous for Forex trade. So you would think of these numbers in like oil or gold or something like that. So pound Aussie can be difficult. It's one of the hardest, in my opinion, my personal opinion, one of the hardest pairs to trade. But if you can harness this pure energy, man, this can be a big mover. So let's keep moving forward. We have, I'm going to talk about Aussie yen here, which we entered and then re-entered, and we're about to hit another take profit point, which is right along. And you know, we hit this trade and hit a stop loss earlier in the week again, but now things are starting to turn around, because this is what I was going for when we hit the stop loss on Monday night. And you know, that seems pretty logical there. You know, I don't regret taking that trade, even though as a loser. The thing is that the trade itself was there, the setup was there, the risk to reward was there, and you know, as long as you follow your trade plan and don't over leverage, then you know it's okay. If you do have a losing trade from time to time, that obviously happens. Now, this is a big deal, though, from what I've been getting at with the yen catching up and this risk off finally catching up to the markets. I think Aussie yen is a perfect example of this happening. Is that we would have a like a straight up, good old fashioned false breakout here. So if you're in my group, you know that I talk about false breakouts all the time, and my mantra and saying is that a false breakout typically leads to a breakdown. And so that's what we would have here, is a nice breakdown. You can see it really wouldn't take too much for us to break back inside of these levels here and create some huge downside momentum, because let's keep in mind we're already in a massive downtrend. Like this has been trending to the downside for a long time. And so, you know, I really, you know, maybe now it would make no logical sense that now would be the time for the Aussie to straight up reverse. But you know, maybe it would. Like the markets aren't, anyway, they're not logical. So you know, I should just take that out of my vocabulary. It's a little lesson for you for sure, that there's nothing logical about the markets anyways. It's Mark Douglas is a great writer and trading coach for that, trading in the zone. His book is pretty much all about that exact concept, what I just said. And so logically, it doesn't really matter what would happen. But regardless, this has been in a downtrend. And so us staying in that trend, there's more probability for us in that direction. So with that being said, that would mean all we would need would be a nice little false breakout here, which I think is very doable, especially when you see how overextended is Aussie all the way across the board. We would just need a breakdown back inside these levels, which, you know, we're already seeing. And, you know, it's no point in even looking at it on the 4 hour, but, you know, check this out. Remember that throw over line on the S&P 500? What do we have here? Right? So we get back inside this same level for Aussie yen, then man, it's going to be a game on. All systems go to the downside. So that's what it looks like on the daily chart. And so coincidentally too, so what you want to look for is look for all the pieces starting to match up. And so here we have a 200 EMA moving average here, and so that lines up perfectly with where this throw over line would be, and then also where we are on the daily chart. So look, on the daily chart, the RSI here is so overbought you know, on the 4-hour, it's not even diverging yet. I would like to see it diverging, but it's not. But you know, this is our target, and we can get there like that, super, super fast. All we need is for this dip to happen in the S&P, or you know, you could take a look at the Dow here. Dow has been just supercharged, and you can see, wow, it's, boy, don't I wish I stayed in this trade. So here we've been following the path is straight up lined out here. I haven't looked in this chart in like a couple days, so you can see though, just looking at it, it's following the fanning trend line set up that I have here, which I teach in the training, following it perfectly. But here we are, and we have a higher high here, and then we're making another move, but it's blatantly, really just blatantly not confirming here on the 4-hour. So which is a decent sign of a pending reversal, which could be happening. So that, you know, that's us at the Dow. And it's interesting though that NASDAQ isn't following suit at all. Well, I guess it is, man. So things change so much in these indices market. Like this morning, it was looking bearish, right? At least, I mean, I don't know what you would even define bearish anymore, but you know, we started to see, you know, this candle here, and started to see some rollover. And actually, I think that was this little move right there this morning. Yeah, that was it. And then just twice. So since I've looked at it, rebound, but we are starting to fall off of here just a little bit. RSI divergent. And so whenever I just like pull up a chart and look, those are the puzzle pieces I look for. So and then how does that correlate with the other pairs across the board? So we had a AJ, we had GA, and let's take a look now at Euro. Well, actually, I think with the theme of the video, this fits more. GBP Swiss. And so this was kind of like, you never really expect this trade or this pair. And trust me, I'm not like looking at pound franc to like trade it that like adamantly, but when it does, I have traded it in the past, and when it does work out, man, it does make some moves, and I think potentially here, and this would at least, you know, we've already hit our 20 pip target, our stop losses, or you know, at our entry point, and we have a very easy shot, I would say, for 100 pips here, pretty fast too. All we need is that one spark for risk off, and boom. And like I said previously when talking about AJ, we've already been in like a downtrend here. So this is a nice little kind of breakout of this V-shaped recovery. But look, we haven't made another high, and we're failing to right now. So if we're failing to make another high, that means we only have one other way to go, and that's down. And so, and if we zoom in here, you know, this is a nice reverse hammer candle. But the way I read that, and this is how I looked at it this morning, I was looking at the hourly chart, and I was looking at, I love seeing this type of action when we get a bunch of wicks and a bunch of rejections here. So that just tells me that, you know, we're running out of gas. And that's how I read that. And look, right on the hourly chart, or maybe we just go to 4-hour here and use these fractal points. You can see how well this all lines up here. So I think we're in for some serious downside. You know, if anything, you know, as long as we stay below this trend line here, this level of support, which would kind of hammer out this triangle pattern, looks really good. And then, you know, on a daily chart, well, I was going to say that would kind of carve out a pennant type formation, but I don't think we're quite there yet, to be honest. But I do like it on a 4-hour, like something like that. nice and quick and easy, and you know, not rocket science type move, but you can see how we put the pieces together for the risk off component of our trading plan for the week towards the end of the week, because I tried to pull the trigger on it too early, and that, you know, resulted in some losses, right? And so, you know, so many times, I know for me, and I think statistically most traders, we're right to begin with. Most of the time we're right, but we just either go too big too soon, and I don't know how many times, I'm sure you all can relate to this, go too big too soon, and it all plays out after the fact, after you've pulled the plug on the trade or something like that, and then it all unfolds before your eyes, you know, and it's so frustrating. So statistically, we're usually correct anyways, and but this time, and that's exactly what happened with the start of the week. You know, I thought rioting and looting, and of course, now I'm talking about the National Guard coming into some of these cities, and I thought, boom, we just have yen right off the bat, but not so fast. But I think that is going to play out, and also the Swiss putting in work as well. And so same scenario, just a little bit different here on US dollar Swiss this morning. So, you know, we hit this trade. It panned out very nicely for us. At least, you know, we caught a quick 20 pips and had a great entry here. So you can see, and what I was going for is these same boxes. I've been using them more and more, and they've been very helpful for me, and it just really designates where these supply and demand zones are. So if you're curious about that and you're in the academy, go to supply and demand zones, and I really kind of explain that concept in more detail there. So, you know, you can see we just boom, wicked right into there, and then turned over into the downside. So all this is at this point now, and that really confirmed that we've broken out, or broken down rather, from this triangle. And, you know, as long as we're consolidating on the backside of it here, you know, we've only got one place to go, and that's down. And so this is the risk off creeping its way in to the market. And really, I guess what is happening is reality setting in, and because the money's already there, like what is it, the what's the word, elation, well, the money's already been made for the market getting pumped and pumped and pumped, and now eventually you would think that gets turned around. So Euro USD is in the same boat as that. We're holding this in some drawdown right now, but I think the euro, man, it's been on a complete tear. But this falls right in line with the idea that the risk off hasn't quite stepped into the market. So I called this into this trade at 112.25, and that was right at this point, right here. So, and that's right at this fractal is where I called, put us into our sell position, because I was looking at the divergences here, and watching the euro and how it's been interacting with the dollar, but I still feel really, really good about this trade because not so much of anything else other. You can see where this line is, where it goes back to. So that's really, really nice. And I did a whiteboard video on this last week, how important it is if you just started to do this. And when I say you, I mean me. Don't get me wrong there. I'm talking to myself. If I just did this more often, and what is that looking left, I would be a much more profitable trader. So you can see how significant this line is. You know, we can go all the way back here, and this box still has relevance and plays out all the way across the board. So man, so this video has been entirely too long. If you stuck with me all the way here, let's see if, first of all, give yourself a pat on the back. That means you actually are engaged and want to make this happen for yourself and for everybody around you, you know. So, and I want that to happen for you too. So here we are on Euro USD. Let's see, this is kind of the missing link to the puzzle, because but everywhere across the board, it looks like yen's going to turn around. It looks like franc's going to turn around. The dollar turning around more than anything, I think, makes an impact. We have to look, does it turn around against the euro or not? Also US dollar yen, but getting a dip here is going to be super, super important. So we'll see if it happens. So thanks for watching. I appreciate also all the support, and click the links below to get started. And I'll see you in the VIP chat room. Let's crush it the rest of the week, everybody. Peace.